When a foreign person or a non-U.S. citizen or non-resident sells or disposes of a U.S. property interest, the U.S. government requires the buyer of such property to withhold 15% of the total sales price of the property and remit the withholding to the U.S. government. This is because of the Foreign Investment and Real Property Tax Act, or FIRPTA for short. The withholding is applied to the total tax due, and the withholding is not the tax itself. Withholding is required because when a U.S. property interest is sold, it creates a taxable event, and any capital gains tax due must be paid with the filing of a U.S. tax return. The withholding that the buyer remitted to the IRS is applied to any capital gains tax due, and the seller can apply for an early refund. So the withholding essentially compels the seller to file a U.S. tax return and pay any capital gains tax due. When there are multiple persons that are both U.S. persons and foreign persons, the total sales price is allocated among all of the sellers in accordance with their capital contributions on the property. The withholding requirement is then applied to the foreign person. Now, there are some exceptions to the FIRPTA withholding requirements. For example, if the foreign seller can establish that they are not in fact foreign sellers, then the foreign seller can issue a non-foreign affidavit to the buyer at the closing, and the buyer will no longer be required to withhold the 15% FIRPTA withholding. Another exception to the FIRPTA withholding requirement is the personal residence exception. This exception applies when the total sales price of the property is under $300,000 and the buyer or the buyer's immediate family intend to reside in the property as their personal residence at least 50% of the time of the total time that the property is in use in a 2-year period following the closing date. If this is true, then the buyer can sign an affidavit and the buyer will no longer be required to withhold the 15% due. If the total sales price exceeds $300,000 but is below $1 million, then the personal residence exemption still applies. However, a reduced withholding of 10% will apply, and the buyer will still have to sign the affidavit attesting to the buyer's personal use. Now, the foreign seller may also apply to the IRS for relief of the withholding requirement through Form 8288B, the application for a withholding certificate. The foreign seller would have to show that their maximum tax liability is lower than the withholding requirement. Now, it's important to note that the seller will still be required to file and pay any capital gains tax due on the sale of the property. This is done through the filing of a U.S. tax return for the year which the property was sold. In order to file a U.S. tax return, the foreign seller will be required to obtain an individual tax identification number. For more information or to apply for a withholding certificate, you should contact your tax attorney or your CPA. My name is Pamela Hernandez, and I hope that this FIRPTA talk has helped you.